Good afternoon and good morning to some participants in Europe. Thank you very much for joining us for this webinar, Understanding ESG and Responsible Investing. My name is Thomas Khan. I work for Architas Asia in Hong Kong, and I'm delighted to be the moderator for today's session. Today's webinar is going to be broken down into three stages. Firstly, we will hear from Rahul Hora, the President and CEO of AXA Philippines, who will talk about the importance of the financial sector in driving sustainable outcomes. Secondly, we will have a presentation from Deschamps, Head of Client Group, who will give an insight into responsible investing as an institution, but also as a retail investor. And finally, we will finish off with a Q&A, where we will open the floor to questions both to Rahul, to Nicola, and also to Dexter Akoli, who is the Director of Investment Solutions at AXA Philippines. So again, thank you very much to all of the participants for joining us, and also thank you to our speakers. Before we get started, I would like to give a brief introduction regarding Rahul's background. Rahul has over 20 years experience in the investment industry. Prior to joining AXA Philippines, he had held senior positions at ICICI Prudential and also AXA Asia Life in Hong Kong. Rahul joined AXA Philippines in 2009 as Chief Agency Officer. In 2015, he was appointed Chief Operating Officer of AXA Philippines, with his role focused on making AXA Philippines more customer-centric through digital transformation. And then in 2016, he was appointed CEO of AXA Philippines. So thank you very much, Rahul, for joining us. And I will now hand over to you for your presentation. I think you might be on mute, Rahul.
Okay.
There we go. Thank you.
So am I loud and clear to everybody? Okay. So thank you, Thomas, for the kind introduction and the words, and very, very good morning, good afternoon to all the participants. And thank you very much for joining us on this extremely important and relevant topic, of today and modern world, the ESG. So I'll start my presentation by just giving you a little bit of an overview of, how an insurance company like us or like globally AXA plays a role in, moving money, and how do we play a role in making decisions on investing. How do we get into this picture? Because some of you might be wondering that insurance is all about protection, but not so much. So starting my slide, Dex. So this is how an insurance industry works. While a lot of our products are around protection, but specifically in Asia and some of the other parts of the world, insurance industry and insurance companies also play a very, very significant role in providing propositions of savings. So our products offer opportunities for customers to systematically save money for various needs of theirs, whether planned needs or unplanned, circumstances in life. Some of them like being children's education, retirement, and so on and so forth. And that's how we come into this particular, scenario, or in this particular position, where we collect funds from our policy holders, and in lieu of the fact that we promise certain returns on their investments that they've made in our products, because of the savings proposition for which they bought the product, we then invest these funds on behalf of the policy holders to various asset classes, and we provide these funds to various corporates through the various asset classes of equity, fixed income, local, global, so on and so forth. Next slide, please. And so this is, the sustainability risks that threaten the global security as we talk. And I'm sure nobody needs a slide like this at this point in time, because the risks that I have on the screen are not only academic knowledge to people, but I think we are living in this kind of a world and experiencing these risks on a daily basis. And of course, with all the awareness that is being created around these risks, the gravity of the situation, the gravity and the significance of these risks are quite clear to all of us today. Of course, the number one over the last 15 months, the climate change, which had taken the number one slot for many years, was overtaken by the pandemic and infectious disease as a risk, given the COVID experience and the pandemic experience that we all have been facing since March of last year. But I think the key message here is that whether it's the pandemic and infectious diseases, whether it's climate change, or it's geopolitical instability, a lot of these risks are intertwined. They are interdependent. One causes the other, and they're also at this point of time becoming extremely significant and real to us. So that's not something that is in the near or distant future for us, but these risks are quite real, and we are facing them. We are living these risks, and hence the importance of acting on it, hence the importance of doing something about it. Otherwise the time is running out for us to as a human race act on some of these things. So of course, one of these things is climate change, which has been, as I said, the top runner amongst these risks for a very, very long time. And and as I said, there is an importance of acting on this particular climate change, and the whole ESG investing has a lot to do, or is driven by this need to act on the climate change that is currently today at the top two of the risks that threatens global security. So next slide, please. So of course, one of the important milestones that as a world we achieved on this particular risk of climate change was the Paris Climate Agreement. This was in 2015, and the Paris Climate Agreement was signed by 195 countries who committed to collectively hold a warming of the average temperatures to below 2 degrees Celsius. And necessarily, this particular Paris Agreement was all around three, the framework was around three important aspects. The first was the commitment to ensuring that we are limiting the global temperature rise to, as I said, below the 2 degrees Celsius. The second one is to provide a framework around transparency and tracking, on how, as a world, and how are we progressing on the laid out action plans, and through the reporting and through the various tracking mechanisms which were put into this framework, to see how we progress from here on to the years in the future, on this particular joint objective that was taken into this Paris Agreement, or in this meeting in 2015. And the third was primarily around mobilizing support around this extremely important, target that the world had kept for itself. Mobilizing support, especially in the developing nations, through green investments, through responsible investing, and of course, ECG is an integral part of this particular, Paris Climate Agreement of the United Nations. Next slide. So, of course, aligned to the Paris Agreement of 2015, AXA as a global company, and also as AXA in all the entities that it exists, we started our own small journey. We launched our new phase in our own climate strategy, acknowledging that this is something extremely important, which is not only it's not only an effort which is to be driven by the governments, and unless the private sector completely joins the bandwagons and contributes to the overall actions around ESG, we wouldn't be able to make much of a move or much of a progress on this. As one of the top global organizations across the world, especially in the financial sector, we put forward our own strategy, our own the pillars of our strategy around this particular aspect. And what we call internally is the AXA for Progress Index. And it primarily revolves around three aspects. The first one is all about us as being an insurer of what we do, what our nature of business is. And the other one is as an organization, what is it that we want to stand for? How do we operate as an organization? What is the culture, and how do we make our own employees stand for some of these important climate change concerns that we are all facing? And the third one is around investors. We as an investor, we as an organization which manages quite a significant amount of assets of our customers, and also because we have our own general accounts, how do we invest our own assets so that we are not only championing the ESG aspect, but we are taking a lead and contributing to this whole cause of climate change. So some of the targets that we have set for ourselves on this is to ensure that first of all we wanted to reach a 25 billion euro in green investments by 2023. We wanted to reduce our own carbon footprint of AXA's general accounts by 20% by 2025. As an insurer, we are on the social aspect of it. We are developing and promoting a lot of insurance products for the vulnerable population. Before this, in most of the countries, especially in the Philippines, we've been very focused on providing insurance products for the mass affluent customers, for the mass customers, for the high net worth customers. But now we are consciously driving ourselves to go into the vulnerable population and developing products which really caters to the needs of the the needs of the vulnerable population. And as I said, as an organization, how do we promote the awareness and the consciousness about these things, the knowledge of ESG, and how do we create our own employees as leaders around transformation? So this really involves a lot of training. This involves a lot of education of our own employees and our stakeholders on climate issues. And I'll touch a little bit more in subsequent part of my presentation on this. And as I said, overall achieve carbon neutrality by 2025. So this is the framework that we set for ourselves. And we also started our own journey, driven by none other than our global CEO, Thomas Buberl, who's extremely passionate about this particular aspect of climate change. And he do understands the urgency and the fact that we really need to act on this particular aspect and contribute, our share to this particular objective. Next slide, please. Why is it relevant for Philippines? Now coming down to Philippines, the country that we stay in, we are all Filipinos. So, yes, it is relevant for the entire world. It's relevant for the entire human race. But how is it relevant to us? And this really came to me as as quite a shock when I got to know this, that it was really that Philippines was the number 2 in terms of risk that that we are exposed to because of all the events that that we on a yearly basis face as a community. And if you look at all the major typhoons that have occurred, which have created most of the challenges, it's all happening in the recent years, and we just are number 2, just behind Japan, and if you look at the strongest tropical cyclones in the world history, 5 out of 10 of them had landfall in the Philippines. Most destructive typhoons in the Philippines happened in the last 10 years, which is 9 out of 10. So yes, it's relevant for everybody. Yes, it's relevant for the entire human race. But I think it's most relevant for us, as Philippines, as a country geographically placed in a situation where we face quite a lot of events in a given year. I think it's our own, for our own good and our own, Filipinos betterment. We really need to act a lot and act fast, because we are most exposed. We are one of the most exposed countries, and countries at which are at maximum risk amongst all the other countries. Next. So how do we see this concept moving in the Philippines? We have seen a lot of action in Philippines on this particular aspect. Of course, there's a lot of public opinion and pressure. There is a lot of awareness which is being created around climate change and the importance of climate change, and hence there is a lot of public opinion and pressure which is being created on organizations to act on it, on the government to act on it, around sustainability and business attention. We are happy that the government has also started to respond on this in Philippines. Yes, the Philippines government is the signatory of the Paris climate, and it has ESG has already reflected in our own plan and the ambition nation target that we've set for ourselves for 2040. So now it is quite integrated. It's there in the government policies and government focus, which is quite heartening and which is quite good. In the private sector also, we see the needle moving. We have SEC demanding and putting this as a requirement for all public listed companies to declare their annual sustainability report, to share it. So there is some movement on the private sector. And again, as UNPRI, which is one of the global organizations which is leading on green and sustainable investments, is also working in the Philippines and encouraging investors to use this responsible investment to channelize investments, and of course that we are able to enhance returns and better manage risks. Next slide, please. Next slide. Is the slide moving? Sorry. Okay. So the role of insurers in sustainability, what do we do as an organization or as an industry? How do we as insurers play our role in sustainability? I think there are three aspects. Insurance is always associated with protection. That's the first thing that comes to the customer's mind. And there are three levels of protection that we offer to our customers from a sustainability standpoint. First is protection on the owned assets. It's the life assets. The life insurance aspect of it, it basically protects the household income and helps in the economic recovery of a family if the bread earner, if anything happens to the bread earner. And that's a very typical life insurance product, which creates sustainability for the family, for the dependents. Then the other aspect is the health insurance aspect. We are, of course, seeing a morbidity risk as a much higher or an equally important risk as compared to mortality. The health expenses are growing at a rate of about 7 to 9% on a yearly basis, which is much higher than inflation in a country like Philippines. And in a country like Philippines, almost 56% of the medical expenses are actually out of pocket, because there is not enough structure around government supported health benefits. We have the HMO sector, we have the PhilHealth, but all that only contributes to about 44%, whereas 56% of the medical expenses in the country are still out of pocket. So there is a huge gap. And as an insurance company, we act in that space to ensure that we provide products which enable the customers to protect themselves against financial emergencies which come with health incidents. And the third one is PNC insurance, or GI insurance as we commonly understand, which has protection of properties, businesses, which are basically assets which are owned by a customer. So PNC insurance is all about protecting the assets, in other ways, protecting the livelihood of the people, which of course gets impacted by either catastrophes or natural catastrophes, as I was sharing earlier, which happens quite regularly in the Philippines on a yearly basis, or some accidental, challenges where either through fire or through accidents, there is a destruction of the asset owned by the customer, which of course brings challenges to the life of an individual. So these are the three areas in which the insurers, companies like us, AXA, and the whole insurance industry acts. And this is our role, and this is what our products do, and this is how we play a significant role in the sustainability aspect of it. What do we do, as AXA Philippines? I did share that the passion around ESG and the passion around in sustainable investing is all being driven by our global office, by our global CEO, but a lot of it is being done locally by each country. And we are, as AXA Philippines, also integrating sustainability into our own business strategies. And in the next few slides, I'd like to share with all of you on what is AXA Philippines doing? What are we doing close to home? What are we doing in the Philippines market? And how are we playing our small role in this entire sustainability, our passion on sustainability and climate change? Next slide, please. So going back to the, index, the progress index that I was talking about, to begin with, we work as an insurer. That's our role. That's the business that we are in the Philippines market. So what we do is, first of all, we have taken a conscious business decision to exit from industries which are not consistent with our ESG principles, and we do not offer any kind of PNC insurance. So as I was sharing earlier, our role in sustainability around PNC and GI, where we, through our products, help the customers to protect their assets. We have walked away from doing that for the companies which are not consistent with ESG principles and the companies which operate in these industries. Which industries are these? These are industries like coal, oil, dirty power, gas, plastics. So even if it meant loss of business for us, we did put our actions in that place, and we wanted to ensure that we are walking the talk and hence move away from that business. The second aspect is emerging customers. Emerging customers, in the Philippines is a very, very large number of customers. And one of the big advantages of digital innovations and digital customer interactions and digital ecosystem that we are seeing evolving in practically every aspect of our lives, it really allows insurers like us to make our products accessible to the emerging customers. In the past, most of the insurance products were sold in a physical format. The interactions were very face-to-face, but now with the advent of all these digital ecosystems, it really allows insurers like us to bring our products to a mass market, and we are able to, in a sustainable basis, develop business strategies which brings easy, simple products and relevant products to the mass market, and we call them as emerging customer segment in our own language. We have already established certain partnerships in the Philippines, and we are proud of our collaboration with GCash. We just launched it last year, and we were already able to insure some 109,000 lives around, with our collaboration with GCash. We are working with on a property micro insurance product for MSMEs. We are also, developing products for our OFW. So there's lots of work and a lot of partnerships that are being developed by AXA with some of these in the Philippines to ensure that we are able to bring some of these very relevant and affordable products to the emerging customers. Next slide, please. Then as a company, as an organization, we want to be a role model for our own employees. We want to ensure that we are, we are working with our partners, we are working with our stakeholders in ensuring that we are positioning ourselves as AXA as a promoter and as an advocate of ESG, and hence one of the things that we did was we instituted a sustainability committee within the organization. This committee focuses on ensuring that we are able to oversee the development and implementation of sustainability strategies. And it's better done like this, because otherwise everybody gets involved into day-to-day business and KPIs, which of course take the top of the mind kind of space for everybody. But this sustainability committee that we've created has really helped us to ensure that we don't miss ensuring that our strategies are developed, are implemented, we track them. There are some very small steps, but important steps that we've already taken on ensuring that we reduce our paper consumption. We were one of the first insurance companies to go into completely e-policy, and hence, reduce a lot of our paper usage. You can imagine the number of policy documents that we were couriering in the past, and each policy document is quite a bulky document. So we're reducing our paper usage, we're reducing our plastic waste, and we are implementing a zero plastic waste practice in AXA offices. Another thing which we are about to start, and we have made some initial steps on it in the past few months, is educating the Filipino students on ocean literacy. I think for us, we believe that education will go a long way. We need to have more and more people join on this bandwagon of ESG, and one of the ways to make this as a movement is to ensure that there is education around this topic at the grassroots level. So on ocean literacy, of course, the Philippines is a country where this is extremely relevant. And we have launched our ocean literacy initiative, and we really hope that we would be able to expand this and partner with more and more educational institutions which will promote ocean literacy to the grassroots levels and make more and more people aware of the importance of these initiatives. Next slide, please. As an investor, as I was sharing right in my beginning, in my early slide, in my first slide, that AXA as an insurance company collects a lot of premiums from our retail customers, and we have two kinds of investments that we do. We invest on behalf of our customers, and also our own, as I said, general accounts. We invest. And we have, on both these aspects, we have ESG factors which are embedded in our investment process. And Architas will talk in the subsequent presentations more around this. And we have Nicola, who's going to be talking about this aspect a lot. So I'm not going to touch more, but our overall target that we've set is a 25 billion euro green investments by 2023. And the general decrease in the carbon footprint of AXA's general accounts assets by 20% by 2023. And these are clearly measurable, and we keep ourselves accountable on these two metrics that we've kept for ourselves. Next slide, please. So going back to our, how do we integrate the sustainability into AXA Philippines, business strategy? Just as a summary, as I shared earlier, these are the four aspects on which we operate and in which we contribute to our ESG, to be a responsible ESG player. And these are insurance. So as I said, we walk away from underwriting risks and we are going into launching products for our emerging customers. We want to, be a thought leader in this aspect in the industry, and of course, also take opportunities to educate. And I was talking about the ocean literacy program, and of course, even this particular session that we are doing with our colleagues in ECCP, we are. We want to be passionate about being a thought leader and positioning ourselves as somebody who's contributing to this particular aspect. On our own operations side, we want to minimize our direct environment footprint, and of course take our own small steps in the direction of paper and water wastage reduction. And of course, the last piece is the investment piece. We want to ensure that all our investments are going through the ESG mandate, and the ESG is getting incorporated in our investment decisions more and more. So I end my slide by just again introducing you to the three pillars, or the three sections of our overall strategy of AXA, which is globally and also relevant for AXA Philippines. And we have put together this particular strategy, and we have started our own journey in this direction, driven by our purpose. And our purpose as AXA globally is to act for human progress by protecting what matters. And we are extremely passionate of our purpose, and we take ourselves as a big global organization who has the responsibility to act in accordance to the ESG priorities. And hence we are very happy that we have put together a concrete strategy and a framework on which we are going to act, and we're going to monitor ourselves on how we make progress on these aspects going forward. So that brings me to the end of my presentation. Thank you very much for all of you to be there with us today and to listen to our own story. And hopefully we will be able to, encourage and inspire some of you today who are listening to us to join us and join, or, and become one with us in our pursuit of a better world for all of us going forward. Thank you very much.
Thank you very much, Rahul. A great insight into how AXA globally and more locally in the Philippines is integrating sustainability into its operations and strategies. I particularly like the Ocean Literacy Initiative. Something I'm trying to do myself is educate myself on climate change, given the risks that climate change poses to society today. Next, we will move on to a presentation from Nicolas Deschamps, who will give an insight into investing responsibly from an institutional and retail perspective. Again, before Nicolas starts his presentation, I will give a brief introduction into Nicolas' background. Nicolas has spent over 20 years this year at AXA. He is what we call, I think, an AXA baby. He's held roles in various companies within AXA, in the corporate finance group team, also within AXA IM, and then before joining Architas at AXA France, AXA's biggest entity. In 2015, Nicolas joined Architas as head of client group. So Nicolas is responsible for developing and promoting investment solutions to all of Architas's clients globally. Included in his remit is sales, marketing, product, and innovation. And more recently, he has become the head of ESG for Architas. So he's a very relevant person to be speaking to us. So I will now hand over to Nicolas for his presentation.
Hello, everybody. So it's a pleasure to be with you today. And, I recall when I was, fresh out of university, so being an AXA baby, as Tom is mentioning, that I joined this industry because I wanted to have an impact, and potentially naively that I was expecting to change the world. And, in whole experience, this is more or less true at various moments of your career. But I think now it's a time where it's very exciting to be in the financial services industry, because we believe that we have an immense role to play in creating a better world. And that's what I will try to share with you today. So if we move to slide 3, a short introduction of what is Architas. So Architas is an asset manager, a multi-manager that has been created in 2008 to build investment solution of products for retail clients. Very customer-centric, diversified solution. And since then, the business has expanded globally, and we now operate over more than 13 countries with a strong presence in Asia and strong presence in Philippines through AXA Philippines. If we move to next slides to give you a key fact. So, our purpose is really to build client-centric investment solutions for retail clients. That's our main DNA and our main purpose. We manage a little bit more than 41 billion USD in assets, which is a reasonable size, with a footprint in Europe and in Asia. And I think we boast of having a real entrepreneurial culture, really client-centric culture to develop the best solution and then integrating the ESG preference of our clients and also distributors. In the way we operate independently, but still we have the backing of the AXA Group, which, as Rahul mentioned, is one of the biggest financial institutions in the world that give us a lot of support, a lot of legitimacy, and that is very important in the way we operate. So maybe it's not totally clear for you what a multi-manager is and what does it mean to be a multi-manager. So if we go to slide 6, just to give you some background, if you want to invest in a fund today, you will have to pick funds out of more than 120,000 funds available on the market. So there are 120,000 funds available on the market, meaning that it's mission impossible for a retail advisor investors to be able to pick the funds, but even for small institutions, it's extremely challenging. So that's why it's important to have a multi-manager like Architas, having a team of 25 investment specialists that are screening regularly the market in order to find what we call the best-in-class funds, so the best in each category, and I will try to explain you a little bit later what it means. Making sure that we have the best deals with them and that we are only paying for active managers where they add value. We don't want people who are passive, who are sitting on the money. We want people who are active at a reasonable level of risk, of course, but also having the flexibility to change asset allocation very quickly and with a broad diversification. So we are a global player. We invest in Asia, we invest in the US, we invest in Europe, we invest in fixed income, we invest in equity. And if there is one thing that I've been learning over my experience in the financial investment is the importance of being diversified, because it's important in terms of risk management, because it's important not to put all your eggs in the same basket. Okay, so that's basically what we do with Architas. And to give you maybe something a little bit more tangible to assess what it means on the next slide, I try to illustrate that by comparing what is the performance of a decathlon Olympic champion, which is a very strong athlete, over different type of categories, and the performance of the Olympic champion of each category. Okay, and basically what we do is trying to find the Olympic champion in each category. And like in sport, it makes a big difference. So when you look at the metaphor of the Olympic athleticism, you see that in each category, the Olympic champion is performing more than the multi-specialists. And in some categories, the performance is really different, really better. And that's the same for investment. In each category, our role is to find the best in class, the people who will bring additional value for our clients, and in the end, and the solution we manage. So that's basically what we do in Architas. And in that, the ESG dimension, the responsible investment dimension, is absolutely critical, and that's what I will develop over the next part of the presentation. So if we move to slide 9, when you talk about responsible investment, it's very important to understand what we are talking about, to understand the terminology. And you will see later that we have been running a survey, and one of the frustrations of the client is that they don't really understand what we want to tackle and what we want to do. So what does ESG mean? It means that we focus on 3 factors. The first one is environment. So environment is what Rahul described, is all the climate change, all the pollution, all the respect of and the protection of the planet in which we are living. So it covers ecosystem protection, it covers climate change, and I mean, all that type of dimension, which is sometimes the most obvious, but we will see that it's more complex than that. But ESG is not only environment, it's also taking into account social factors that are very important to our clients. And this relates to the rights and the well-being of employees, but more than that, the rights and the well-being of the whole communities. So it will cover the way, I mean, the different companies are treating their employees, but also the education aspect, the health aspect that are so critical. And you know, the recent COVID crisis has shown us how critical it is. The third pillar is governance, and governance maybe doesn't sound very marketing or attractive or very concrete, but it's something that is very important and very important for clients, is making sure that the companies in which we invest are treating their shareholder right, that they have proper governance, that they have proper check and balance, that they are very careful about potential corruption issues, about proper accounting, about the way they treat protection and data around the client. And you will find out that this topic that might not be the most glamorous is absolutely critical for our client, and it's very important in any decision we make. So that's basically what ESG mean. And the way it translates into investment, we will see on the next slide, it translates into a wide array of ways to invest. So when you look on the left, the traditional way of investing that has been built over the 20th century is to maximize your investment return out of a risk budget, okay? So high risk, high return, low risk, lower return. But you don't take into account any extra financial or extra criteria to do that. Your only objective is to have an efficient portfolio, and you only focus on performance. You might be aware of ESG, but it's not really the problem. At the other side of the spectrum, you have philanthropy. Philanthropy, you don't have any investment objective. Philanthropy is just kind of donation. You don't care if you lose the money. All you care about is the social impact, but it's not an investment in itself. And in the middle of that, you have all the responsible investment spectrum, starting with exclusion. So exclusion, it's a value-based investing. You clearly mean that there are some topics or sectors you don't want to invest in. So in AXA, it's very clear we don't want to invest in tobacco, in oil sands. We don't want to invest in weapon. We don't want to invest in coal, to quote a few. So these are pure exclusion, okay? Then there are other variations of that. Responsible investment is investing by trying to maximize the investment return while taking into account ESG factor in your process. So basically that's what we do in Architas. There is a variation to that, which is sustainable investment, which focus mainly on building a sustainable planet. So mainly focusing on the environmental and social aspect, which is a variation of that. And there is the impact-driven investment, which is focusing on the impact you will have on climate education, but by monitoring a very clear KPI to assess and measure your impact. So basically, that's the array of solutions that are available, and none of them are bad or wrong, but they are the potential that is offered to different investors. So at Architas, as I say, we focus on responsible investments. Just also for your information, if we move to next slide, we are part of the UN PRI commitment that Rahul briefly mentioned. To understand what the United Nations wanted to do with PRI, we need to remind that in 2015, the United Nations have set 17 sustainable development goals that they want, I mean, the humanity, the Earth to reach by 2030. And these development goals, they are extremely aspirational. One of those is to eradicate poverty by 2030, which is extremely ambitious, as you might think. It covers ecosystem, it covers good policy. So they are extremely ambitious. And in order to achieve these goals, there's no way the governments and the non-financial, non-profit organization will be able to deliver that. So they have identified a funding gap of 30 trillion USD to be able to develop these goals. Meaning that they need the financial institution, the big asset owners of the world, to commit to this objective, and to give them a framework and a reward to help the whole world getting in that direction. So incorporating ESG issue into investment analysis and decision-making process, that's what we do in Architas. Being active owners, so you don't just get the money and don't participate in the governance, the shareholder meeting of the company in which you invest. Having the proper disclosure, making sure that as an asset owner, you promote the acceptance and the implementation of the principles. So we, with all the asset manager we're working with, we are very keen to push them to apply that and putting immense pressure on them to comply and to improve, their impact. Report on the activity and work together to enhance our effectiveness, implementing the principles, so working with the United Nations to do that. The United Nations PRI has given us one of the highest rating they can give to asset managers. So we have an A rating, meaning that they are happy with the way we support this principle and the way we implement these principles. Just to give you a sense in next slide about what it means. We have built an investment process that really takes into account the ESG factors. And what we try to do is to get the best investment outcome possible while taking into account very strict ESG factor to make sure that the quality, the ESG quality of your portfolio is very strong. So in our investment process, we will look when we are deciding to give money to an asset manager on behalf of our client to make sure that they have a proper team, qualified, experienced, that they have a proper investment process when they are making the right decision, when they are structured, when they say what they do and they do what they say, and taking into account the investment performance, okay? Making sure that they have a risk profile, the return profile that is consistent with their risk profile, and really understanding the way they do it, the way they build it. But making sure that they have a level of ESG concern and focus that is sufficient for us to be confident to give them the money that our clients are giving us to manage. And we will have a qualitative score to assess first, is ESG important for the firm in which we invest? I mean, do they believe it's important? Do the CEO talk about it? Is it a real priority? 2, is it incorporated in their own investment process? Do they take that factor when they select stock, when they invest? And 3rd, how do they monitor it? Do they give us KPIs to monitor that they are really on track? And out of this analysis, we will give them a score from 0 to 5. And any asset manager that doesn't have a rating beyond 2 out of 5 can't be part of our investment. So can't be, they won't be in the AXA balance sheet, any funds that don't give the guarantee to our client that they have this minimum ESG level. And that is very important because it puts a tremendous pressure for the asset manager who want to work with AXA, which is one of the biggest investors in the world, to comply with it. So if we move next, practically, what does it mean? So by the end of 2021, we want to have all our offer screen around this methodology, and we are really on track with that. And on especially thematic offers towards environment, sustainability, and pure sustainable offers to make sure that we monitor strategic KPI to make sure and to assess, the carbon footprint of our portfolio, to make sure that, in terms of governance, there is enough diversity in the firms in which we directly or indirectly invest. And any fund that will be below a score of 2 out of 5 will be, will have no chance to be selected, but will be excluded from our investment list, from our investment fund, etc., etc. And within 2022-2024, we want to extend the strategic KPI monitoring and for all our sustainable offers to align with the target of the AXA Group, which is to decrease by more than 20% the carbon footprint of our portfolio. So it means that when you are a client of AXA Philippines and you invest in one of our products, you can be confident that the impact of your investment will be positive, responsible, and I think that's pretty reassuring. Okay. Then also, what I wanted to share with you today is what we have been doing to understand the real preference and the real interest of our clients towards ESG. And you can see that we also focused on the Philippines market, and I think it was a very interesting review. If we move to next slide, we surveyed more than 11,000 individuals over the world, not necessarily AXA client. It was investor on the market, reflecting the breakdown of wealth on this market between mass market, affluent, and high net worth, and trying to understand how they understand the responsible investment, what are the motivation, because it was something that was really missing on the market, and we wanted to be able to compare these figures globally. So if I can share part of the outcome on next slide. When we were talking to investor in Philippines, what we found out is their first priority is the financial security of their investment. Okay, first objective is I want my money to be secured. But then when you ask them how they want it to be invested, that's when they really care about how it's invested and the respect of responsible investment criteria, ESG criteria. And also what is very interesting in a country like Philippines, where there is a real emerging middle class that will invest more and more money over the next few years, you find that for the non-investors that are also younger investors, 75 of them believe that ESG factor will make a big difference and express a clear appetite for that type of investment. And that ethical and ESG factors are very, very important. And interestingly enough, half of the investors believe that they hold at least one product that is, aligned with the ESG objectives. Okay, so interesting background to have in mind. If we move to next slide, it's very evident that people struggle to understand what we mean by responsible investing, ESG, etc. So that's why I think I started my presentation by giving a kind of glossary of the different terms. It's fairly complex. So I think as an industry, often the financial services industry tend to be very happy to be complex. And I think it's not really helping, not very helpful. And it's important to talk to clients, especially on that type of topic, so that they really understand what they are doing. And the two terms that they probably understand better is the responsible and sustainable investment that are the most recognized. For instance, they don't understand ESG. For them, it seems very opaque. And what they care about is really sustainable and responsible investment. So it's an important insight for us to be able to explain that to end clients. If we move to next slide, we asked the clients, in terms of investment and ESG, responsible investment, what were the most important factors to take into account and to cover? And it came as a big surprise to us. So usually we expect the environmental topic to be the highest in terms of priority because of the major concern about climate change and as I would mention, I think not the least for Philippines, there is a real emergency and a real concern to have an impact and for things to change. But globally, when we ask this question, we saw that it's important. But the main factors, because we're talking about money there, about where will I put my money, what is important when I invest my money, was about governance factors and the first factor that came as a priority is the transparent accounting. Okay, and in Philippines, there are not a specificity. I mean, all over the world, making sure that when they invest their money and when we invest the money, that the firms in which we invest have a proper and transparent accounting was a big priority. Then the other very important topic was about data protection and security. That was also something very important for them, and to make sure that it's something we take into account when we invest. And then the third and fourth factors were making sure that we promote when we invest healthy lifestyles and well-being. That's also a very important topic over there, and the access to education, which is a more social aspect. That's very important, and this on this Philippines, it's a kind of outlier where the education topic is something that is very important for the client. But in the top four, no presence of environmental concern, which is interesting and probably a challenge for us also to explain that what we do has a very positive impact on environment, but also being mindful that the expectations of clients are really toward good quality accounting, making sure that when we invest, data protection is well handled, and that we promote healthy living and good education for clients. Okay. If we move to next slide. Traditionally and historically, people have believed that responsible investment was coming at the expense of financial performance, financial return. And it was very common, even with very sophisticated investors, that basically it was a kind of trade-off where you had to sacrifice your wallet if you wanted to respect your heart. So I don't know if it's our Catholic culture where we believe that any goods must come from repentance or anything, but it was the perception. And what we realize after a lot of studies is that it's not true. That responsible investment, to the least, doesn't penalize the investment performance of the portfolio. That potentially can also improve the quality of the return. And that's basically what we have seen over the last few years. And it's really understood, at least by the end clients, that it shouldn't come at the expense of performance, which is good news, because it will give a real incentive for client to invest. What is important to understand is that there is a strong expectation, especially in Philippines, about the detail, understanding what it means, what is the breakdown of the portfolio, and potentially what is the impact of what we are doing. So it's a challenge for us as an industry to be able to deliver that. And there is a real appetite also for clients that regulation is pushing the asset manager and the asset owner to invest in that type of categories of assets and to be able to disclose, which good news, it's what they are doing, because there is a clear understanding that this is important as a credibility for the industry. So a lot of maturity, and way more maturity within the retail sector than probably we expected, so which is very good news. And Filipinos are very, very bold about sustainable investment, which is an interesting outcome and not a surprising one. If we come to next slide, I think it's important to to reconcile this aspiration from clients to be more responsible in their investments, their appetite to be able to do that, and having the conversation with the advisors that are, for many of them, have been pretty cautious in the past over that type of thematics, probably because they were concerned about the investment of outcome. I think they all acknowledge that we have a role to play and that the impact on the world is very important. But I think there was an hesitation for them to have that type of conversation. And I think now that there are strong offers to satisfy this objective, that there is a strong appetite with clients, I think there is an opportunity for advisors to have this conversation with their clients. And most of the clients are really expecting, as 59% of them, to have this conversation soon enough, I would say, with their distributors and their advisors. Okay. So as a conclusion and as the key takeaway, so very important and strong sense of ethics from the Filipinos, and probably more than any other countries, they are really keen to see their ethics, their perception of the world, the projection of the world to be reflected in their investment, and they want it to be taken into account. So it's something that matters and that is important, and that's a strong message, and it's good news because it's something on which we want to focus. But there is a real interest and a real strong, willingness to translate the sense of ethics into the investment. The second takeaway, as a conclusion, that even though the environmental and social factors are very important, Filipinos investors are very keen that we are, as investor and asset owner, very careful about the governance of the companies in which we invest. And again, governance is the good accounting, is a good protection of data for our clients, it's good check and balance, is being very careful about the corruption issues. So this is a real priority for the clients, and it's something we need to promote because we are very careful about it. And it's also, again, very good news, but it's important to mention that again to our client because it's a very important topic for them. And the third bit is that there is a real opportunity for advisors to have conversation around ESG with their clients because clients expect that, because there are offers available. And I think there is a potential gap that I think we need as an industry to fill. And I believe it's a great opportunity and a great news because if we do that, you will have a positive impact of the world. You will have potentially a better outcome and very strong solutions to be promoted to our client. So a win-win-win type of environment. Okay. So basically, that's what I wanted to tell today. And thank you for your attention. And I will hand back to Tom.
Thank you very much, Nicolas, for that insightful presentation. It seems like the audience has thought so too, because I can see we have a number of questions which have come through on ESG. So now we will move to the Q&A section of today's webinar. So I would please ask that Nicolas, Rahul, and also Dexter come back on and put their cameras on and unmute themselves. So we've had a number of questions that have come in prior to the webinar today, and I can see we have some in the chat box. I will try my best to cover them as much as possible. However, if we don't cover them, then we will reach out to you to try and answer your question accordingly. So the first question that I have that came in is for Rahul. There's a famous quote, with great power comes great responsibility. AXA Philippines is one of the largest insurers in the Philippines, whether it's by income or in assets under management. As CEO, what sort of responsibility do you feel to make sure that the company is both acting and investing in a sustainable manner?
Okay, thanks. It seems like Miss India, Miss Philippines kind of, or Miss Universe kind of a question, but yes, true. I think as one of the large insurers and one of the largest insurers in the industry, and as I shared in my presentation also, we feel not only responsible, but with the recent digital focus and the digital ecosystem which is being developed in the country, and a lot of key players are entering into that market and gaining significance, we believe that now we have the means to reach out to a much larger population with our products and services as compared to what we have been able to do in the past. So I think that's one thing which not only is the fact that we have the desire, but we are also now feel confident of the capability that we have to bring this. As I said, traditionally it was a very face-to-face kind of a distribution model, which made it almost unviable for us to reach to the masses. So we are hence extremely excited and developing new products, getting into new partnerships, and you will see a lot of that coming in the next few months and years as we move into that aspect. So emerging customers is clearly one of our focus areas, and we are extremely excited with that. The other aspect is the health aspect. I think we are personally very focused on that aspect. We do understand that as an organization, we have a very important role to play in that aspect. There is not a very robust insurance of any kind, whether public or private. There is no insurance in that space. And as I was sharing earlier in terms of data, almost 56% or I think 54% of the medical expenses are out of pocket. And these are expenses out of pocket. But I'm sure, can you imagine the number of customers who cannot even bring good medical care to their family members because of lack of affordability? So that there's no data around that. So we are now focusing on developing a lot of such protection products and bringing them to the customers, especially in the segment of health. So I can, yes, go on, but what I'm saying is we are not only passionate, but we are acting on it. And we have, we believe that the digital ecosystem of the country is enabling us to be able to, bring some of these strategies to life quicker than what we had expected. And COVID in that way has really helped us, to expedite and speed up our efforts on this aspect.
Okay, thank you very much, Rahul. Our next question, which came in prior to the webinar, is for, I will hand over to Nicola. So Europe has seen exponential growth in the last few years in relation to ESG and responsible investing. I believe at the end of 2020, around 80% of the global assets in ESG funds sit within Europe, which is around $1.4 trillion US. Based on your experiences in your role, can you give an insight into how ESG has grown within Europe and how important ESG is to investors today?
Sure. I think that the first aspect is to say that the 1.4 trillion that you mentioned, it's not enough. So if we want to achieve the UN SDG, it's 30 trillion. So it's basically 30% of the assets of the full asset management industry. So it's just a start, but I'm confident we will reach it. So why Europe has been leading the charge on this one? I think there are two reasons. The first one is that in Europe, historically, there have always been a very high sensitivity to the social aspect. So meaning that it's in Europe that the first welfare system has been developed, in Germany at the end of the 19th century, then in the UK, then all over Europe. But this is very embedded, I think, in the European mindset and philosophy, which is a bit different from the traditional Anglo-Saxon, apart from the UK, to some extent. So people are very aware of that. The other aspect, the second reason, is that the European asset management market is very institutional, and you have a lot of pension funds, big insurance companies, where first CEO decided to make a statement about it, so really pushing a lot of assets into that industry. And also most of these bodies have some unions who are represented in their decision-making bodies. And unions are very, very cautious about the social aspect, but more and more about the governance aspect. And this is great news because it has allowed the industry in the Netherlands, in the Northern Europe mainly, to develop an immense track record. I mean, ESG investing is not new. You have 25, 30 years of background. And now it's the opportunity for the retail market, which is very important. It's a big part of the asset management world globally to invest. And the good news is when I look at the aspirations of people in Asia, so we didn't look into the US because we are not present. I'm very, very hopeful that the retail investors over Asia and potentially also the institutional one will follow the lead very, very quickly. And as we all know, in Asia, you do things way quicker than we do in all Europe. And I'm sure you will catch up very, very soon. So hopefully it will be more balanced in the future.
Thank you, Nicola. For this next question, I will pass over to Dexter. So Dexter, thank you for joining us for the Q&A. So we have a question in, are there currently any companies in the Philippines managing ESG funds? And maybe to add to that question, if so, can you tell us how successful they have been in raising assets into those funds? So Dexter, I think you're on mute.
Hi, can you hear me now?
There we go. Thank you.
All right, great. Okay, so in terms of ESG funds, what we have seen in the market is as early as 2015, certain asset managers have created ESG-themed funds, investment funds. And the likes of BDO came up with their ESG equity fund in 2015, and followed by BPI with their Catholic Values Fund in 2017. And most recently, ATR Asset Management also launched their Sustainable Development Growth Equity Fund. And in terms, if we're to look at the insurance variable life space, what we've seen would be the likes of PNB Allianz and FWD also launching sustainability equity funds, which are more of a global equity funds. Now, when we talk of success or relative success, that could be a bit tricky. Usually asset managers would measure, let's say, success in terms of AUM. Now, what we have seen as we scour the market on these types of funds is that when it comes to domestic type of investment funds with certain ESG themes, the investment universe becomes a bit small, given that the local equities market and even local bonds market is also small, not as compared to, say, the global investments. So what we've seen would be global funds with ESG themes would tend to be a bit more successful relative to local funds with ESG themes, mainly because it also gets to have different investment themes that they could play around in the global investments space.
Thank you very much, Dexter. Rahul, I will come next to you. I can see a couple of questions here in the chat box in relation to challenges. So I will read out this question. So the question is, what are the challenges for the insurance sector in the shift to ESG investing? And what do you believe are the critical success factors to steer the whole organization towards ESG and responsible investing?
I think the challenges to begin with are on education. I think, as Nicola also mentioned, there is this myth that if an individual chooses the ESG framework or takes that option, then it comes at a cost of compromising the possible returns on investments, which is of course not true. So there is a lot of education on that, because unless we deal with that mindset, you wouldn't be able to get the customers confidence. And as Nicola was sharing, that Asia is a lot about retail investments, and hence that customer education is of extreme importance. And the other aspect of I think the challenge from an organization standpoint is, I would say it's not a challenge, but it's a journey that we are starting. And I've said it a lot of times already, that this digital ecosystem is developing, which allows us to reach out to a wider base of customers. But it is still, the confidence level of the customers on using digital ecosystems from a payment standpoint, the penetration levels of this, there is still a very, very long way to go. I think we have made the first few right steps in that direction. We are seeing good traction, but if for us to make the needle move, there is a certain number of customers and transactions which really needs to come on these digital platforms. And we are, I said we are on the starting aspect of that particular journey. So I would say there is a lot to be done on that particular aspect, also. For me, I would say more opportunities than challenges, and it is all about education. So yes, I think slowly we will see things catching up. And as Nicola also was sharing a lot of optimism, I also share optimism more than pessimism that we in Asia will catch up with Europe in terms of our. I mean, you saw the survey, right? I mean, a lot of customers are extremely conscious and do want these things to be put in practice. It's just that we need to move the needle faster on the education part.
Okay. Thank you, Rahul. Nicola, is there anything else? There's a couple of comments here about whether investing in an ESG fund will result in lower returns for an investor. Is there anything? Is there a common kind of a question or query in relation to responsible investing? Is there anything else you'd like to add on this topic?
I think it's a fair question, huh? And when you look at the survey, the why clients want to invest is because they want to protect their assets. Huh? So we should keep that in mind and being very cautious and mindful of that. Why I believe that sustainable, responsible investment should at least perform in line, but even I believe outperform the rest of the assets. It's very mechanical, because when you are a company, because in the end we invest in companies that you don't behave responsibly or in a sustainable manner, very soon you will be sanctioned by the main source of profit for you, which are your customers. And you see there are a lot of controversies now with the social network. It's very, very quick to disappoint potentially your client. So if you don't do that, you might lose your client, which honestly, when you run a business, is your first source of profit. But not only, if you behave badly, you will be less attractive for your employees. And especially, it's very important for the companies to attract millennials, new generation, and they are very, very, very cautious and mindful about the impact of the company they pick. So if you don't have the right employees, whether you work in industry or services, you will fail. So it will be very difficult to outperform your competitors. Then the third factor is the shareholders. It's us, the money owner. We don't want to invest in that firms anymore. And even if we wanted, regulation will push us to go into firms that will invest or will act in a sustainable manner. Meaning that a lot of assets technically will be transferred to that type of thematics, to that type of investment. So it will be quite mechanical. So there is no guarantee in life, but mechanically, all the big asset owners of the world, so the 100 trillions managed by asset manager, and even when you look at the 200 trillion of client assets over the world, they will go into ESG, putting a kind of I don't want to use bad terms, but again of tsunami of assets to go into that type of assets. This being said, there is a very old saying, of market, that when you are looking about savings, you need to take a long-term approach. So, meaning that in the end, the investment return should be higher or at least the same, doesn't mean that you might have some volatility in the short term, because there are traditional asset classes, they might have some correlation. So that's why it's important when you invest in that type of assets, like any kind of financial assets, to take a long-term approach, or at least to take an approach consistent with your risk profile. But if you do that, if you take a long-term approach, for me, it's a pretty obvious way to invest money.
Thank you, Nicola. So we have another question here, which I will open to both Dexter and to Rahul. So the question is, what is the company's program on responsible investing in the Philippines?
Okay. Do you mind if I
Go
take
ahead,
that?
go ahead, Dexter.
Okay. Well, I think as Rahul pointed out earlier, it's important that we first educate the public, our customers, and also even AXA employees. And we start off with awareness building on responsible investing. With the strategy initially shared by Rahul earlier, we start off with ourselves when it comes to promoting responsible investing, what this is all about, with our distributors, because they are expected to have such conversations, or perhaps at least arm them with that knowledge should one of their customers get to ask what is ESG, what is responsible investing. So awareness is key at the start. Now, again, it is a journey, and good thing that we do have our global partners like AXA IM and Architas, and that's where, as we see that the market is being ready or getting ready to embrace the ESG themes that we have. This could then translate to some investment offers or investment propositions in the near term, in the coming months, possibly, or perhaps several months in the making. Whole point there is that first we build awareness, provide information to both customers and distributors and AXA employees, and from there we then now create a proposition or an offer to the customer.
Thank you very much, Dexter. Rahul, anything to add from Dexter there?
No, I think the other thing is that we, in addition to what Dexter said, we did do offer products, which offers global asset classes to our customers, which goes through what Nicola mentioned, the whole ESG framework, right? So I think that to me is an important way we are introducing in a responsible investing, because it not only offers diversification, because Philippine equity market or even the fixed income products are quite limited. It's a small market, so it not only offers global investment, but it goes through the whole framework that Nicola mentioned about from an ESG standpoint.
Thank you, Rahul. So for the next question, I will come to Nicola, and we have a couple here on the pandemic, something that I hope we've all been affected by, but hopefully all coming to the latter part of it. So there's a question here about what are the challenges for ESG and responsible investing in the post-pandemic period.
So first, I believe that with all the, it was a tragedy, this situation. And it was very tough for, the communities, for the countries, for the economy. But I think it was a kind of wake-up call about many topics that are embedded in the responsible investment approach. And the fact that we need to be careful about the environment. It shows that, it was a very interesting studies from The Economist recently that showing that if we want to reach the Paris Agreement, we shouldn't generate more CO2 than we have been generating during the pandemic. Yeah? So it was very low level of activity. So it shows that we will have some trade-off to do, that the economy will have some trade-off to do. But it's a wake-up call that basically the economy can also survive without, in my situation, taking a plane every other day to visit people. More and more I use digital solutions to engage with clients. It allows me to spend my time more efficiently, to reach more people. So I think this has been a very positive aspect. I think it also shows socially that we need to be very, very careful about the weakers in our society. All the people in the gigs economy, in the restoration, in the service that we were not really taking care of. We see that these people are very important, and that some of them have been in the first line to support us, you know, in the health and services, in the services industry. They have really played a role. So I think it's a really incitation for us to share more values and to be more mindful when we invest about the social impact of what we do, taking care of that type of people. So I think paradoxically, I believe you know, this situation will accelerate our focus on that type of topics. My concern is that you know, human beings tend to have a very short memory, and we may, once it's a little bit behind us, come back to our you know, previous behavior. But you know, as you can feel, I'm an optimist, so I believe it won't be the case, and I believe that it will have radically changed the world, the way we invest, but also the way we operate and the way we live. So for me, it's I'm really optimistic about the future.
Thank you, Nicolas. So I think we have time for probably one more question, which I can see here is, I think, the longest question in the Q&A box. It's a good paragraph. It's a tough one, so I think we'll come to Dexter to finish up, which is in relation to reporting framework and standards. And in the question here, it talks about without a strong regulatory framework and without market pressure, there's a lag in the Philippines in a push for responsible investing. So Dexter, Nicolas talked about the strong market regulatory standards that have been rolled out in Europe. How do you see in the Philippines standards in relation to ESG and responsible investment developing? And do you think it will mature in the coming years?
Okay. I actually saw that question and it's all to answer it by typing it, but okay, thanks for asking that. All right, so for us to do responsible investing, I think first we need to have investments or instruments that would qualify as responsible investments, right? So what we have observed is that since 2018, there has been good steps by the SEC. For example, SEC has instituted the necessary framework for sustainable finance and sustainable reporting for publicly listed companies. So one example is in 2018, they have already adopted the ASEAN Green Bond Standards, and also in 2019, the ASEAN Social Bond Standards and ASEAN Sustainability Bond Standards in 2019. So what this allows is certain companies, issuers, to come up with securities, in this case, green bonds, that can be made available to customers. And these are ESG compliant securities. So that's one side. And the other side is with that framework for sustainability reporting, that also improves that transparency for publicly listed companies so that they could improve their reporting in relation to sustainability. Now, that is very important for the likes of a fund manager or an investment analyst who is going to assess certain investments or certain stocks into their portfolio. Now, having such reporting improves that transparency. So now they could really assess whether a certain stock or company is what would form part of that sustainability or that universe of ESG compliant securities. And those are good steps. And I think those are game changers, because now we'll see more and more ESG compliant securities available in the market. And we have seen a lot of issuances in ASEAN, and Philippines has led in issuing green bonds, which is a good sign, which means companies, private companies, are already accessing that the capital markets on the green bond issuance. Now it's a matter of taking that further for publicly listed companies here in the Philippines, and then we'll see that momentum translating into retail investors getting into ESG compliant retail funds. So I hope I was able to answer that. So there's actually a good momentum coming in, and we do see this as really going mainstream.
Thank you, Dexter. Sorry, a very tough question to end, but well answered. So I think that brings us to the end of the webinar. So first of all, I'd like to say thank you to Nicola, Rahul, and Dexter for joining. But a bigger thanks to our participants for listening and also taking part in the Q&A. I hope you find the presentations insightful, and I hope it gives you some sort of motivation to invest responsibly or integrate sustainability a bit more into your daily lives. So thank you very much for participating, and enjoy the rest of your days.